As promised, Dawn Kopecki of Bloomberg News. She's their housing and finance reporter. In our last half hour, you may have heard we were talking about mindsets when it comes to the economy. Is there a mindset when it comes to the real estate sector?
The psychology of the real estate sector? There is, especially with people who are currently in their homes that are underwater. In past downturns, when people have been foreclosed upon, it's been because they've lost a job or because they're getting divorced or there's been an illness. But now what they're seeing, what economists are seeing, is people who still have their jobs, who aren't suffering necessarily a big financial hardship, are simply walking away from their homes because they're so far underwater. 1 in 4 mortgages right now are underwater in the United States. That's, almost 25% of every home is now at the point where the borrower owes more than the house is worth. And people in Florida and, who are like 50% underwater are just walking away because they figure by the time the economy recovers, they'll never get their money back. So there is a different psychology in this downturn when it comes to housing than there is, than there has been in previous downturns.
You said 1 in 4. That was the Wall Street cover a couple days ago. The foreclosure rates, it talked about 65% in Nevada, or at least 65% of those underwater in Nevada, 48% in Arizona, 45% in Florida.
Yeah.
What does...
And California is the other big state.
Exactly.
Yeah.
What kind of drag then does that make on the economy overall in dollars and cents terms, not philosophical terms?
Well, those are big economic states. I can't recall the exact GDP of California, but California's GDP alone is bigger than a lot of countries in Europe. It's the biggest economy within our economy. And so it does create a drag. Economists like to say that we have regional housing issues. We have regional housing markets, and so if you have a downturn in one area, it doesn't necessarily affect others. But the downturn in Florida, California, Nevada, those states is so great that it is pulling the rest of the housing market with it, because you have a lot of banks that have a lot of exposure in those areas, and then they're tightening up lending standards across the country, making it harder for other people to get homes, causing a drag on jobs. They're having to lay off people because they've had so many losses because of those states, and that causes a drag on the overall economy as well.
I think last week there were reports of new home sales up a little bit, or 6.2%.
Yeah, you have to be careful with those numbers because a lot of that is being driven by artificial demand that's being driven by the Treasury Department. The Treasury Department has a first-time home buyer tax credit of $8,000. They just expanded it to more buyers starting December 1. And so a lot of that demand has been driven by that. A lot of it's being driven by the fact that the Federal Reserve is keeping interest rates so low. A lot of economists are very worried about what's going to happen when the Federal Reserve and Treasury Department start pulling back some of these programs. They also are buying mortgage-backed securities issued by Fannie Mae and Freddie Mac. That program is scheduled to end in March. So a lot of economists are worried about what that means for interest rates, what that means for demand, and think that all these programs are merely prolonging the downturn, not necessarily preventing it.
Is there an equation between what you've just described and what some described as far as the Cash for Clunkers program that we saw with automobiles?
Yeah, a lot of people think that. What it does is it pushes demand forward. In other words, if I'm on the fence, if I'm thinking about buying a house and I've got a tax credit that I can use and apply towards maybe the down payment, or maybe I know I'm going to get the money back right away, that might spur me to buy now, when instead I might have bought 6 months from now or a year from now. I'm not going to go and buy another house in another year or another 6 months. So what it's doing is it's pulling a lot of people who are on the fence about when to buy, and just it's affecting their buying patterns to buy earlier. The National Association of Realtors, so far there's been 1.2 million people that they've estimated, the IRS has estimated, have claimed the credit. The National Association of Realtors estimates that about 300,000 of those people wouldn't have bought without the tax credit, but that estimate varies from group to group. The home builders say it's only about 150,000. So, not a lot of brand new buyers.
Dawn Kopecki here to talk about commercial real estate, which we'll take on later, residential real estate as well, and its condition. If you want to ask her questions about it, 202-737-0002 for Democrats, 202-737-0001 for Republicans, 202-628-0205 for Independents. Twitter us at C-SPAN WJ, our email is journal@cspan.org. The other number I saw was that the average home sale was $212,000. What does that mean overall, and how does that compare to when homes were selling off the market quite quickly?
$212,000.
The average home price.
Oh, the average home price. It's dropped, and right now it's that the price keeps dropping. Home prices overall, they estimate that the peak to trough, from the peak in November of 2006 to the bottom of the market, home prices nationally will probably drop by somewhere around 20 to 25%, depending on who you ask. And so right now, the national numbers, it also depends on where you get those statistics from, because some of them take into account only Fannie Mae and Freddie Mac loans, which will distort the pricing, and some of them take in a national number.
First call is from Brooklyn. Bernie on our Republican line. Good morning.
Good morning. As a financial expert or a reporter, we had a financial crisis a number of months ago, and everyone considered it to be a major crisis. And we had to do extraordinary things in order to avoid the crisis, which apparently, at this particular point, has been avoided, although things may in the past pop up again. But no one ever said what would the landscape, the financial landscape, the business landscape, would have looked like if we just let the house of cards fall. Have you seen what the scenario was? 60% unemployment, 80% unemployment. Can you give me some idea of what it would have been like if we would have let Citibank fail? Thank you.
Well, it's a lot of economists who've looked at it say it's really hard to predict what might have happened. So I think it's safe to say that unemployment would have been significantly higher. I don't know what the statistics are on it. Home prices would have dropped further and farther and faster than they are today. But at the same time, a lot of the programs that are put in place now, the market's getting back to a point where it could maybe try to get back on its legs, but because of all these government interventions, the private market doesn't have an opportunity to really come back in and correct prices in a natural way.
Mary on our independent line, Chicago. Good morning.
Yes, I have a question. I had a variable rate loan several years ago, and I switched over to a fixed rate, which I now have. But the one thing I haven't understood through all of this is with the prime rate going down, why didn't those variable rate loans, the interest rates on them, also go down?
Well, it depends on the terms of your mortgage contract. A lot of the variable rate loans will go down, but they're adjusted every couple of years. They're not adjusted quarterly. They're not adjusted even every 6 months or so. So it depends on the terms of your loans. Plus, they will often have some sort of stop level where they can only go down by so much, just like they can only go up by so much, they can only go down by so much. So it just depends on your mortgage contract. Each mortgage contract is different, and you really have to, it pays to read the fine print in those cases.
That is reflected in a story on the front page of the Washington Post this morning about a daycare provider who found herself in a home worth $698,000, finding out that she couldn't pay for it and losing the home.
Yeah.
What has changed since these stories that we've heard about so frequently? What has changed in the process about the ability of finding out if someone has the ability to pay for a home?
Well, it's funny you asked that. The regulators put together a rule a couple of months ago, or maybe even a year ago now, that doesn't allow banks to make loans that people can't afford to pay, which sounds kind of logical and obvious, but they literally, what it is if you're in one of these option arms, these adjustable rate mortgages where you can pick whatever payment you want ahead of time, and then at some point 2 or 3 years into the loan adjusts, and all of a sudden you have to start paying back all these payments you're really just deferring to begin with. Those loans, if you can't afford the payment after the payment adjustment, they're not allowed to make those loans anymore. And so, you know, and a lot of times it's incumbent on the consumer to understand this stuff. I've got a little more experience than most people, but you know, this stuff is complicated even for me. And when I, you know, took out my mortgage, I was offered all sorts of crazy loans that just looked wrong. You know, there's no reason I should be given as much money as they were offering me. And, you know, I tried to read the fine print and decided that these loans must be bad or, you know, wrong or illegal at some point. And it turned out that they were. Not necessarily illegal, but now people in hindsight are realizing those loans should have never been made.
That story and this story and other stories, how does that factor into the administration's desire to see a new bureaucracy, or an agency, I guess?
The Consumer Financial Protection Agency.
Correct.
Yes.
How does that factor into its ability, or at least the administration's desire to see that created?
Well, a lot of people, the Federal Reserve actually has jurisdiction over these issues, over these consumer issues, and they did nothing for a very long time. They could have outlawed these loans long ago, but they didn't. So now the Obama administration wants to create a new oversight agency that can go in and say these terms are too complicated. You have to simplify your loans. You can't offer, you know, really what you're going to get back to, if it has the power that Obama's talking about, where most people are stuck with traditional 15-year or 30-year fixed-rate loans. The adjustable rate mortgages will be very simple in structure and designed so that people understand what they're getting into.
Don Kopecky with us for the next 15 minutes, Bridgeport, Connecticut. Good morning. We talked to Moses on our Democrats line.
Yeah, good morning.
Good morning.
Yeah, I have a comment. I've actually seen two people who are very close to me benefited from the home loan modification programs. And my question is, what can one do to escape escrow payment? Because I started my mortgage about 3.5 years ago, and my mortgage used to be about $1,200 a month. But recently, my mortgage has been going up steadily. So each time, if I call my mortgage company, they say, "Oh, because we have to increase your escrow payment." My mortgage now is actually about almost $1,600 every month. So, is there anything that I can do to stop this?
Is the escrow going up because of your property taxes and your hazard insurance?
The city property tax recently went up, even without, me knowing nothing about it. So until they increased I saw the increment.
Yeah, there's nothing, you cannot escape death and taxes, and there really isn't anything you can do to escape your property taxes. If you don't want to pay your property taxes with your mortgage payment, you will still be required to pay them. You're going to have to refinance and get a loan without an escrow. The only way you can get a loan without an escrow account is if you have more than 20% equity in your home, generally speaking. It depends on your individual loan company. The reason why they do the escrow account is because people will go all year, they'll get, a $5,000 tax bill, and they won't have the money to pay it in one lump sum, and then the county or the city will foreclose on your property. And so there really isn't a way to escape it. If it's your hazard insurance, you can shop around for a lower policy, but it takes months for that to be adjusted in your escrow policy. You can, protest what your house is being levied at property tax-wise, but there really isn't much else you can do to get out of it.
On our Republican line, Molly from Los Gatos, California.
Yes, I tell you, this Obama administration, I work in insuring properties, and I have been putting together insurance on properties with 4 loans through Freddie Mac and Fannie Mae. 4 loans with nothing down. They even advertise bad credit that you can get a loan. They haven't changed doing a thing that brought the whole economy down. They are working day and night making bad loans, and especially the modifications. We have Hispanic clients who are on their fourth modification and are still 4 months behind in their mortgages. This is going to be our money. This is going to tip the scale like you've never seen it before. And Obama's behind this whole thing.
Yeah, I should probably get your contact information. I'm hearing stories like that all the time, and it's anecdotal evidence right now. There's no, data generally, but in some sectors, depending on where, I hear a lot of stories that Fannie and Freddie are still underwriting, very bad loans. They've tightened their underwriting standards. They've made it a lot more expensive to get that money. But right now, the Federal Reserve has rates so low that they can add on all these extra fees, and it doesn't seem like it's that much more expensive for consumers. So I would love to follow up and talk to you later if you can track me down on Bloomberg.
But she made a broad statement saying that, in the broader sense, nothing's changed. They haven't changed a thing that brought the economy down. Is that a fair statement?
Well, it's not entirely accurate. They've added different fees. They've added all sorts of fees depending on what your credit score is. They've made it more expensive. They're still lending. They're still buying loans. But part of the reason why they're buying loans is because their regulator has directed them to do so. Mm-hmm. So they are under government orders to do this. Fannie and Freddie, one of the reasons why they were taken over last year is because they started pulling back from the mortgage market. They stopped buying a lot of loans. And the regulator came in and said, no, you can't do that because it's exacerbating the housing crisis, and made them, go in and continue doing this to keep the mortgage markets liquid. That's why the markets don't have a chance to correct themselves, because of all these government programs. And those companies are an arm of the federal government now.
There was a cover of Business Week not too long ago about the commercial real estate crisis. It's called A Deep Trouble. Can you give us a snapshot of where it is at currently?
Yeah, right now there's about $1.4 trillion worth of commercial real estate loans. Unlike your loan and my loan, in most cases, you don't have to refinance every couple of years. You get in your loan, you stay in it for however long, till you pay it off. With the commercial real estate sector, the loans are generally good for about 5 years or so, and then you renegotiate your loan. Well, what's happening is 1.4 trillion, which is about maybe 20% of the market, needs to renegotiate their loans within the next year and a half or so, and they're not able to because nobody is buying the loans on the secondary market. So there are no investors to invest in these loans. They don't want to touch them because they're fairly toxic right now with the market in a downturn, and you have a lot of hotels going under, I was in Las Vegas touring foreclosed homes with a realtor, and the building his real estate office was in foreclosure. So, you have a lot of commercial buildings that are having trouble, they're having trouble securing tenants, they're having trouble making rents. The Mortgage Bankers Association has a beautiful brand new building downtown DC, barely anyone's in it. And it's in financial trouble. And so, the whole sector was giddy with all this money that the Fed was pumping into the economy, and just made a lot of really stupid, bad decisions.
Is that decision making the same internationally as what we see in the papers this morning about Dubai, as far as their condition?
I missed that story, but there are a lot of international governments that are also having trouble. I know Dubai has built up their real estate market in the last couple of years. It was on fire for a while there. Mm-hmm. You've got the most extraordinary buildings in Dubai, and so I wouldn't be surprised if that was also running into trouble now.
Charlotte, North Carolina is next. We go to Michael on our independent line.
Good morning.
Good morning.
Well, my situation is that I was foreclosed on and evicted 4 weeks ago, yesterday actually.
Oh, I'm sorry to hear that.
Well, thank you. It was a Wells Fargo note. I owed $84,500 on the note. They sold, after negotiating with them since February of this year, they sold the property to what I call a holding company, because I can't find out who they are, for $65,250. That's a loss of $19,300.
Yeah.
They did that without even offering me. All I wanted to do was renegotiate the loan, maybe put what I owed at the back end, drop a point or so on the interest rate, and stay in the property. I was only in it for 2.5 years, but they decided that wasn't good enough. I sent them letters, hardship letters. I sent them financial statements for, like I said, since February of this year, and they went ahead and and they bought it back again. I don't know what the price was of buying it back again, and it's now on the market. I don't know what price it is right now. It hasn't been listed yet, but it's going to be on the market. I don't know if that's legal. If it isn't legal, if it is legal, it should be illegal. It's damn sure immoral. Excuse my language, but that's my situation, and I would like to know how come they sold the house for $19,300 loss before they negotiated with me. I thought they were in business to make money, you know. I call it loan laundering, where they got rid of one note for $65,000, and then they bought it back again. Now they've a big note. So that's my opinion on it. I'm in the construction business. I'd have to say one thing: it wasn't Wells Fargo's fault that I got behind, but it wasn't my fault that the housing market and everything else fell apart. So that's
yeah. I hear stories like that all the time, and there's a lot of people are falling through the cracks. And you know, I'm not sure, I can't speak for Wells Fargo, but a lot of these banks that have the loans in foreclosure, they're in a pipeline, they're in a process, and they move from one department in the bank to the next and go through that process. And it's very difficult. It's very difficult for an individual to stop that process or to get them to do something else. I know people in California that spent about a year and a half trying to negotiate to get a principal reduction because their home had dropped in value by 50%, and they tried to get a principal reduction on their $700,000 that they owed. The house was only worth $350,000, and they couldn't get it, and the bank foreclosed on it, and it went through a short sale and sold for like $250,000, which was significantly less than what the current owners were willing to pay. And so it's a very human story. It's very tragic that so many people are losing their homes and are unable to do anything and have tried to go through this process. It's very stressful and nerve-wracking for people like Michael. But a lot of people are just falling through the cracks because the banks don't have the capacity to process all of these modifications, all of these note restructurings.
Well, you brought that up, and someone on Twitter asked how many of the present home sales are people with money scooping up killer deals on foreclosed homes?
I don't know. I don't have that statistic. You don't have a lot of investors moving into the market yet. So you have a lot of cash sitting on the sidelines waiting for the market to hit the bottom. But a lot of people don't believe the market's hit the bottom. And until the market actually hits the bottom, you're not going to see a lot of investment money come into it. And economists predict that will happen somewhere around the third or fourth quarter of next year. So we have another year, at least another 9 months of this before things even begin to turn around. And so it's going to take a long, long time until you see investors scooping up homes at foreclosures. I would love to buy a foreclosed home, but I'm not going to be able to get another loan on top of the mortgage I already have. And so 3 years ago, I could have gotten a ton of money. And so it's a different environment right now.
A couple of more calls. DeSoto, Texas. Aberstein on our Democrats line.
Hello.
Hello.
Yes, I bought a home in April, and I have a home, and I know there's an incentive if you have bought a home as a first-time home buyer. This is not my first home. I have a home that I bought and I have paid for. Is there any type of break or incentive, or will I be able to get anything back?
When did you rent in between your homes?
No, I did not.
Okay, so you had one home and then you stepped up to a newer home or a different home. You won't qualify under the president's plan for the tax break. And the reason is it was designed to encourage people who didn't own homes to buy homes, because those people have the biggest economic benefit to the markets. New home buyers buy more stuff. They buy more paint. They buy more furniture. Mm-hmm. And so it wasn't designed for people who already have a home to step up to it. The new tax credit that goes into effect December 1 does. You would probably qualify. It's a complicated formula, but you might qualify under that one. And they just decided to expand it to more people. So unfortunately, you just bought at the exact wrong time to benefit for that tax credit.
One more call. Robert on a Republican line, Tampa, Florida.
Yes, I believe that the the government is going the wrong direction trying to, support buying houses. They should support building new industries in this country and giving jobs to Americans and not giving us all these free money to buy foreign goods with. The jobs will only go to aliens and cheap labor. Why are we concentrating on houses?
Well, a lot of economists feel the same way. I mean, it's the housing market that got us in trouble. The housing market does benefit more than just cheap labor. You get a lot of financing that goes into it. A lot of Wall Street money goes into it. So it does have a net effect of benefiting a number of different sectors. And then the ripple out, benefit is even further than that. And so, it benefits a lot of different sectors, but a lot of economists agree that the focus should be on creating other types of jobs, not so much emphasis on housing.
When do we get a clearer picture of the condition of the housing market? Because you had talked about the government's intervention.
Yeah.
When's a good time frame to actually start looking at numbers of home sales and actually seeing where we really are without that intervention involved?
If the federal government if the Federal Reserve actually stops buying mortgages and mortgage bonds next March, which there's a question that they might extend it, and the tax credit expires next June, you'll probably see our real economy sometime in the fourth quarter of next year. If those programs extend, then it's going to be an even longer time period out until you'll see where the real money is, what the real health of the economy is.
Our guest is the housing and finance reporter for Bloomberg News, Bloomberg.com, the website if you want to see her writing on her reporting on these kind of issues. We have linked it to our C-SPAN website. Dawn Kopecki, thank you so much.
Thank you.